Joining us now is Rothschild and Redburn's Alex Haissl. He holds Wall Street's loan sell rating on the name. In fact, since his call back in September, Oracle has fallen 35%. So round of applause, Alex. Welcome. Why are they being differentiated, or are they being differentiated for their heavy CapEx plans?
Thanks for having me on the show. I think there are really two building blocks, and the first one really applies also to other hyperscalers. Like these large-scale GPU deployments overall generate very little value, and I think that's a fact that is overestimated across the industry. We really estimate that for one CapEx dollar spend, you only generate around 20 cents NPV, and that's like a fix compared to the cloud. So there was like a massive overvaluation. And with Oracle specifically, because the funding is really increasingly coming from debt. If you take Amazon, Microsoft, or Google, they have sufficient operating cash flows to fund all of this, and that's why investors are even more nervous on Oracle.
So they jump out to you as a sell because they don't have the cash flows to fund all of this. What should the company do?
I mean, first of all, the question is, what is the role of Oracle? Because, as you know, they don't own the data centers, and now they're opening up also the idea that, customers can bring their own chips. So what are the customers actually paying for? I mean, you could make the case and say they're basically paying for the leasing duration risk to get access to the data centers, but don't have to sign the lease themselves. From our perspective, and speaking to a lot of investors, it would actually be better just to reduce, the RPO and the capacity and just focus on the core business, because clearly that doesn't generate a lot of value and is a massive burden for the stock. But
should they just sit around? They seem to perceive that the near-term risk is worth it for the far-term, rewards that they might be getting.
I mean, we would disagree because they're really these two building blocks. First of all, Oracle signing, let's say, 15-year data center leases, and then you have a contract with OpenAI, let's say, of 5 years. So you need like 2 refresh cycle actually to generate like a positive NPV in all of this. They shouldn't be sitting around, but I think less customer concentration risk and maybe also like, a slower pace of growth. They don't have to catch up with the hyperscalers in a very short period of time. So more measured would be better.